Should you really try to make less income so you don't get bumped up to that next tax bracket? I mean, who'd want to go from 12% all the way up to 22%? Fortunately, getting bumped up to that next bracket does not mean all of your income will be taxed at that higher rate. And that's because it's a marginal income tax system. Don't run away, it's not that complicated. So what are marginal tax brackets? First off, let's clear up what a marginal tax bracket even is, because it's easy to hear things like marginal tax rate and just want to turn your brain off. It's not as scary as it sounds. The United States uses a progressive tax system. And what does that mean? It means as you make more money, the government takes a bigger bite out of it. And here's the point, not all of your income is taxed at the same rate. And that's how marginal income tax brackets work. Instead of one rate that applies to everything you earn, your income is divided into chunks or brackets, each taxed at different rates. So let's break down those brackets so it's a little easier to digest. Imagine your income is a layered cake, and each layer is a different bracket, and each is taxed differently, starting with the lowest rate at the bottom and working up as you make more money. So here's how it works in practice. We'll keep it simple here. Say you're single and your taxable income is $50,000. The IRS isn't going to slap one flat rate on that $50,000. Instead, they're going to chop it into slices and tax each slice separately. For 2025, the first $11,925 of that income goes into the lowest tax bracket, which is 10%. Then from $11,925 to $48,475, you're taxed at 12%. Any amount from $48,725 to $103,350 gets hit with the 22% tax rate, and so on, with each new bracket going up in tax rate. So taking the calculation a little bit further, first with that $11,925, you pay 10%, which is about $1,193. The next slice, $11,926 to $48,475, that's taxed at 12%. The difference here is $36,550. So 12% of that is $43,86. And on the last slice, $48,476 to $103,350, now we're in the 22% bracket, but only for the amount above the $48,475, which is $1,525 in this case. That's the leftover amount that hasn't yet been taxed. And 22% of that is about $336. So add it all up, $1,193 plus $43.86 plus $336 equals $5,915. That's your total income tax. Now, if we averaged it out, your effective tax rate or average tax rate is about 11.8%, not 22%. Now, a lot of people do think, oh no, if I just make a little more, I'll jump into the next tax bracket and all of my income will be taxed at a higher rate. Just remember that is not true. Only the money that falls into each tax bracket is taxed at that rate. So don't worry, that raise or bonus won't suddenly eat up half your paycheck in taxes. They might withhold a bunch of taxes because employers are silly that way, but you will likely get most of that back as a refund. And remember, the marginal income tax rate is only on the last dollar that you earned. So if your taxable income increases from $44,000 to $50,000, only the income that spills over into the higher bracket gets taxed at the higher rate. So to review, our tax system uses marginal brackets, meaning your income is divided into chunks with each chunk taxed at a different rate. Your effective tax rate, what you really pay overall, is usually lower than your top marginal rate because only the highest part of your income gets hit with the higher rates. And finally, moving up a bracket doesn't mean you suddenly pay more on all your income, just the income that falls into that new bracket. Now remember, this is just for federal income tax. If you're self-employed, you likely have self-employment tax on top of that, which is about 15% extra. That's if you're a sole proprietor, LLC, partnership, but not if you're an S-Corp. So check out my S-Corp video for more information on that, because that can be a very good tax move at the right point. Remember, unfortunately, paying taxes is part of the journey, but understanding how they work can help you make smarter decisions and take the anxiety out of tax season and out of running your business. If you found this video helpful, give it a thumbs up and don't forget to subscribe for more tips to help you keep more of what you earn and stay on top of the tax game. So let me know if you have any questions in the comments, and if you really want to get a hold of your tax situation, come join Reseller Tax Academy. For the first time in a year, the doors are opening back up in January. Use the link below to join the waitlist and be notified of the sale details. You can also come join my free Accounting for Online Sellers Facebook group. That link and other resources are below, all to help you optimize your tax situation and overcome the anxiety so you can focus on building your business profitably.